Real estate has long been touted as a lucrative investment avenue, but the traditional route of buying and managing properties comes with its fair share of hassles. From dealing with tenants to maintaining the property, the responsibilities can be overwhelming and time-consuming. Not to mention, the significant capital required to purchase properties can be a barrier for many potential investors. Enter real estate investment trusts, or REITs for short, a revolutionary investment vehicle that allows you to tap into the real estate market's profit potential without the headaches of being a landlord. REITs have democratized real estate investing, making it accessible to a broader range of investors, including those who may not have the resources to buy property outright. REITs are companies that own, operate, or finance income-generating real estate. These companies pool together funds from multiple investors to purchase and manage a diversified portfolio of properties. This means you can own a piece of high-quality real estate without the need to directly buy or manage any property yourself. Think of them as baskets of real estate assets, such as apartment buildings, shopping malls, office spaces, and warehouses, all packaged into a convenient, publicly traded stock. This allows investors to buy shares in a REIT just like they would with any other stock, providing liquidity and ease of access. But here's the kicker. REITs are legally obligated to distribute a significant portion of their taxable income to shareholders in the form of dividends. This requirement ensures that investors receive a steady stream of income, making REITs an attractive option for income-focused investors. This unique structure makes REITs a dividend powerhouse, often yielding significantly higher payouts than traditional stocks or ETFs. The consistent income from dividends can be particularly appealing in a low interest rate environment where other income-generating investments may offer lower returns. If you're looking for a steady stream of passive income, REITs should be on your radar. They provide an opportunity to earn regular income without the need to actively manage properties, making them ideal for investors seeking a hands-off approach. They offer a unique blend of growth potential and income generation, making them an attractive addition to any well-rounded investment portfolio. Over time, the value of the properties within a REIT can appreciate, providing capital gains in addition to the regular dividend income. REITs provide an opportunity to participate in the real estate market without the burdens of property ownership. You can benefit from the appreciation and income generation of real estate without having to deal with the day-to-day challenges of property management. They offer diversification, potentially high dividends, and long-term growth prospects. By investing in a REIT, you gain exposure to a diversified portfolio of properties, which can help mitigate risk and enhance return. The following sections will delve deeper into REITs, exploring their benefits, mechanics, and various types, and helping make informed investment decisions. We'll also provide insights into how to evaluate and select the right REITs for your investment goals, ensuring you can maximize your returns and build a robust investment portfolio. Investing in real estate directly can be a daunting endeavor. The process often starts with finding the right property, which can be time-consuming and stressful. It often requires a significant upfront investment, which can be a barrier for many potential investors. Involves ongoing maintenance and management responsibilities, such as handling tenant complaints, ensuring the property is up to code, and dealing with unexpected repairs, and exposes you to the inherent risks of property ownership. These risks include market fluctuations, property damage, and the potential for vacancies that can affect your income stream. REITs, on the other hand, provide a hassle-free alternative for investors seeking exposure to real estate without the associated burdens. They allow you to invest in a diversified portfolio of properties managed by professionals. With REITs, you don't need to worry about screening tenants, fixing leaky faucets, or dealing with late-night emergency calls, or dealing with property taxes. All these responsibilities are taken care of by the REIT management team. REITs have dedicated teams of professionals who handle all aspects of property management, ensuring that the properties are well maintained and profitable, from leasing and rent collection to maintenance and renovations. This professional management can lead to higher occupancy rates and better returns on investment. This hands-off approach allows you to sit back, relax, and enjoy the potential rewards of real estate investing without lifting a finger. You can focus on other aspects of your life while your investment works for you. Furthermore, REITs offer unparalleled liquidity compared to traditional real estate. This means you can easily convert your investment into cash when needed, while selling a physical property can take months or even years, involving numerous legal and financial hurdles. REIT shares can be bought and sold on major stock exchanges with ease, just like any other publicly traded stock. This makes it simple to adjust your investment portfolio as your financial needs change. This liquidity provides investors with flexibility and peace of mind, knowing they can access their investments whenever needed without the illiquidity often associated with direct real estate ownership. Additionally, REITs often pay dividends, providing a steady income stream. These dividends can be reinvested to compound your returns or used as a source of passive income, making REITs an attractive option for both growth and income-focused investors. Moreover, REITs offer the opportunity to invest in a diverse range of properties, from commercial buildings and shopping centers to residential complexes and healthcare facilities. This diversification can help mitigate risks and enhance returns. Some REITs even provide exposure to international real estate markets, allowing you to benefit from global economic growth and diversification. By investing in REITs, you can make informed decisions based on the expertise of professional managers and the performance of a diversified portfolio, all while enjoying the convenience and flexibility that REITs offer. Diversification is a cornerstone of sound investment strategy, and REITs provide an excellent avenue to diversify your portfolio beyond traditional asset classes like stocks and bonds. By investing in REITs, you gain exposure to a different sector of the economy, the real estate market, which often exhibits low correlation with other asset classes, providing a unique advantage. This means that when stock prices are down, REITs may hold their value or even appreciate, acting as a hedge against market volatility and economic downturns. By incorporating REITs into your portfolio, you can potentially reduce your overall investment risk and enhance your long-term returns significantly. Moreover, REITs themselves offer a degree of internal diversification. Instead of putting all your eggs in one basket by investing in a single property, REITs allow you to invest in a diversified portfolio of real estate assets across different property types, geographic locations, and tenant profiles. This diversification within the REIT structure further mitigates risk and enhances the potential for stable, long-term returns, making it a wise investment choice. For income-oriented investors, the choice often boils down to bonds or REITs. This decision is crucial as it can significantly impact the stability and growth of their investment portfolio. Both asset classes have the potential to generate regular income, but they differ significantly in their risk-return profiles and long-term growth prospects. Understanding these differences is key to making an informed decision. Bonds are debt securities that represent loans made to governments or corporations. They are often seen as a safer investment. They typically offer a fixed interest rate and return the principal investment upon maturity. This predictability makes them attractive to conservative investors. While bonds are generally considered less volatile than stocks, their returns have historically lagged behind REITs over the long term. This is a critical consideration for those looking to maximize their investment returns. REITs, on the other hand, offer the potential for both income and capital appreciation. They invest in real estate properties and distribute the rental income to shareholders. As property values rise and rental income increases, REITs can generate significant capital gains for investors. Furthermore, REIT dividends tend to grow over time as the underlying properties generate higher rents. This growth can be a powerful driver of long-term wealth. This potential for dividend growth provides a hedge against inflation, something that fixed income investments like bonds lack. Inflation can erode the purchasing power of the fixed interest payments from bonds. While bonds offer a fixed stream of income, REITs provide the opportunity for both income growth and capital appreciation, making them a more compelling choice for investors seeking long-term wealth creation. The decision between bonds and REITs ultimately depends on the investor's risk tolerance, income needs, and long-term financial goals. A well-diversified portfolio might include both bonds and REITs, balancing the stability of fixed-income securities with the growth potential of real estate investments. This approach can help mitigate risks while maximizing returns. Consulting with a financial advisor can provide personalized insights and help investors make the best choice for their unique situation. By understanding the strengths and weaknesses of each asset class, investors can build a robust and resilient portfolio. Ultimately, the goal is to achieve financial stability and growth, ensuring a steady income stream while also building wealth over time. Whether through bonds, REITs, or a combination of both, informed decisions are the cornerstone of successful income investing.